here. Welcome, everyone. It's really lovely to see you all. We have quite a crowd today. I hope you are all here to talk about our Land Trust Practicum. My name is Rihanna DeRosa. I'm the Director of Programs with Habitat for Humanity of Oregon. I'm here with a group of expert speakers, and they are about to introduce themselves. I see my video is frozen, which is classic. Um, as we get started, of course. We are here today to talk about, kind of give you a quick introduction to the Land Trust Practicum, and then we have a wonderful panel that is going to really come in and talk about the lovely navigating and how to better navigate the roadmap to complex home closings. We are going to have 90 minutes today. So we will be here until about 3:30 probably. Our goals for today are to give you this brief introduction of the practicum that we have coming up. We're also going to be trying to help you map some home closing timeline pieces. We're going to be talking about critical partners that you want to engage and when you will need to engage those folks as you go towards closing on a land lease home, especially. And we are going to be really, hopefully, we will have time for you all to be here and engage and ask this panel of experts as well. Please, and I'm hoping you all can hear me still. Can I get a thumbs up just in case? Because my video is still, okay, good. Just checking. Please do feel free to write down some questions if you have them along the way. We are going to have plenty of time, hopefully at the end, to answer some questions as well. But without further ado, and since my video is still frozen, I am going to let these wonderful speaker panelists quickly introduce themselves just so that we know who we're talking to and who's sitting on the panel today. I'm going to start with Michelle, Don, and Katie, and then Julie, I'll have you go last.
Great. Hello, I'm Michelle DeRosa, and I'm a real estate attorney. I am practicing at the Buckhalter firm these days, and I represent a whole bunch of nonprofit housing developers and have been involved in the affordable housing space for my entire career.
Hello, everyone. I am Dawn Holden, and I'm with Banner Bank. I'm a Senior Vice President, the Consumer Direct Lending space. And I have been in and around the habitat world for over 20 years and have been on the board on strategic engagement committees, have done, next year will be my 7th Global Village build. So have been in and around the housing nonprofit space for a very long time. So I have intimate, detailed knowledge of how it works and very excited to be here.
And I am Katie Ulrich. I am the Associate Director at Proud Ground. The Community Land Trust serves about 6 different counties. I've been there a little over 20 years, and I have pretty deep experience on the supporting home buyers and working kind of what we're talking about today. That piece of working with lenders, title companies, and partners, essentially through the contract to close phase. So I have a lot of knowledge in the permanent affordability piece and the land lease, and I'm just happy to be here.
And I am Julie Brunner. I work part-time for Opal Community Land Trust up in Washington in the San Juan Islands. I've been there for almost 25 years now. And then I also am a consultant, and in my consulting role, I have the pleasure of working with groups across the country. I do a fair amount of work with habitats who are interested in switching over to permanent affordability. And then I do sort of technical assistance. I teach classes for Grounded Solutions, so my name pops up in different environments. And I was the host of a training in Washington a couple years ago called the Home Futures Institute, where we tried to focus on providing a really well-rounded training experience for folks working on permanently affordable homeownership. So that's sort of how I got in this room today. So we wanted to sort of start by launching a poll. I don't know if I do this, can you all see the poll? Is that a yes or no? Katie,
Not
give me a
yet.
thumbs up.
Not
Can you
yet.
see it? You cannot see it. Okay, there we go. How about now?
Yep.
Yep.
Okay, so we wanted to, since there's a lot of people, and this is Zoom after all, it's not that fun to sort of do broader introductions of the audience, but it is helpful for those of us kind of talking a lot at the screen to know who's in the room and what the breadth of experience is for the folks who are participating today. So if you can take a minute to answer the poll, we would be grateful. Well, I wish I had a little game show song to play in the background to give you give you just a minute. There's no wrong answer. Just let us know who's in the room so we know what we're working with.
Thanks for taking over, Julie. Zoom always, when you're hosting, decides to go bad, right?
Yep, it does seem to.
Technology, here we are.
And on the poll questions, there is a third one, so make sure you scroll down.
Yeah, yeah. So the first one is what type of organization are you with? The second one is what's your role and experience with your organization? And then the third one is tell us a little bit about your experience. And thank you, everybody. It looks like most folks are jumping right in. So we appreciate your willingness to let us know who's out there. Okay, last call. I think this is probably everybody who's not in the presenting arena. So I'm going to end the poll, and we can see now everybody should see the outcome, I think, if it works. So we've got a good number of habitats, almost half, 15% CLTs and 23% in other nonprofits, and then a good chunk of partners in the room. And what's your level of experience? A few folks who are brand new staff at existing organizations, about a quarter, and then almost 60% of experienced staff at existing organizations. And I just want to make one comment, which is that I love seeing that. One of the things that we found when we've done some of these comprehensive training efforts is, everybody has something to offer and something to share, but also everybody has something to learn. So when we're able to incorporate all levels of experiences, I think it's a richer experience for everybody. And I know me personally, I still walk away from all of these things with some little nugget that I didn't walk into the room with. So we appreciate your willingness to share as well. And then just a little bit about your experience. I was hoping one person would check I'm a rock star and should probably be teaching the next time so that we could tap you for future opportunities. So you could message us on the side if you were just a little bit too shy to say that. Okay, thank you. Oh, and I maybe didn't get to see that, everyone. So yeah, thank you for taking a minute to participate and let us know who's out there. So I told Rihanna that I would start and kick off. I'm really kind of the moderator today, so I wanted to start just by giving everybody also a little bit of a glimpse into the training that we're planning for this spring. So this was really meant to be a little bit of a kickoff. So I don't know, Rihanna, if you want to share the logistics, and then I'll switch to kind of the content.
Absolutely. Thank you so much. I think what I do want to also do is drop the landing page into the chat, which I will do in just a second. We're going to kind of skim over some things, but what is really important to know is that this is a learning journey, right? There are two webinars leading into our event at the end of April. And this is the first webinar, right? The second webinar will be January 22nd. I'm having to go off of memory because my notes have also disappeared because
It
I'm
is January
clearly,
22nd.
yes, thank you. I'm going to open that up again right now. And then the event itself is going to be Tuesday, Wednesday, Thursday in April, the very last week of April in Sisters, Oregon. So we're all going to gather. And then after the event, there will be 2 more webinars. So I think that those are important. The landing page has a lot of details. There are some things that aren't quite there yet, though, and that's why we wanted to kind of do some introduction. So we will have scholarships, and we're going to share that information with you. So that's a really important point, not on the landing page yet, that today is something we want you to take away and know. Oregon Housing and Community Services is helping us provide those scholarships. You will be able to apply for up to $1,500 per organization to help you get there. That can cover travel, lodging, and registration. So that's really important to know, and that's new. And then the other piece that and there's the dog, sorry. The other piece that's really important to take away, I would say, is the audience that's going to be there. A group of us that is our Habitat for Humanity network, who are very familiar with myself, right? And we're partnering with Proud Ground and Oregon Housing and Community Services for this event. And we're bringing in CLTs from all over the state, as well as partner organizations doing affordable housing. We are going to allow for three people to register for this event. And I think that that's really important. We are encouraging, though, that 2 people per organization come. So we want 2 of you there. We're going to max you out at 3. And we're really hoping that you will join us in April for that in-person piece. Registration will open in late January, right around the same time as that webinar launch later. And I'm going to let Julie now kind of jump in and give you a quick overview of some curriculum highlights and talk a little bit about the organizational self-assessment, which is a huge perk for organizations participating in this event.
Okay, thanks, Rihanna. So there was one other comment that were in the notes which is that, is it true that the interest form is live now, so that if you want to not forget about it, you could go ahead and
yes,
and
I
fill
will
out
drive.
the forms.
I am going to drop the scholarship policy in the chat right now as well, so that you can access.
Actually,
that.
they say it is actually on the page in the
it
chat.
is. Oh, see,
So
Megan's amazing. She got it up there. So we'll get all of that to you for sure, though, right away. Thank you all.
Okay. So kind of a quick outline of what we're going to accomplish, or what we're going to cover in the in-person training. So the January webinar is really going to be focused on some of the nuts and bolts around leaseholds and community land trusts and permanent affordability, kind of as an idea and a concept, and something I know that everyone, or many folks in Oregon are implementing now. And then we're going to dive into much sort of deeper levels of all of these topics when we gather together in April. So we'll talk about permanent affordability, why do we do it, and how to talk about it within your community, how the money flows into permanently affordable homes in Oregon, pricing and funding stacks. So it's quite different to price a permanently affordable home than it is some other form of affordable housing, because that initial price is what determines all future affordability. So suddenly that beginning number becomes much, much more important. So we want to talk about that. Partners and lender panels. So we've got Banner Banks with us today, and we'll have some other lending folks in the room there, and sort of making sure that everybody's clear who all the partners are that they need to have in the room and when to engage those folks over time. So we are doing the roadmap today, but we'll dive deeper into those topics when we gather. And then a good chunk of time on stewardship. So in the community land trust world, we talk a lot about stewardship because we're making these 99-year commitments, and we want to make sure that we have a 99-year product, and that we have homeowners who are going to succeed in the long run, and organizations who are going to succeed in the long run. So from my perspective, a lot of that starts with pre-purchase stewardship. So we want to make sure that your program design is solid, so that what you are stewarding is a viable product. And then finally, we'll end it with post-purchase stewardship, which is just the idea that none of this ends at closing. As habitats who provide mortgage financing, I'm sure you all are familiar with that idea, but it is a little bit of a different angle on it when you're worried about the whole thing, right? The physical plant as well, since that I always say, if we build a crappy home, we have to sell it over and over again. So we're not going to build a crappy home, right? So we can make different kinds of investments because we're doing permanently affordable home ownership, and we'll cover all of that. And then, as Rihanna said, one of the things that we did in Washington that was really helpful, I think, was had folks do a self-assessment at the beginning before they participated. So that did a couple things. I think we got feedback from the people who participated that just the act of filling out the self-assessment they found valuable, because they were like, it says, do you have policy X? And they're like, oh, yikes, I don't have policy X. Maybe I should have policy X. So it got people thinking about things in a comprehensive way about their programs, sometimes before they started developing it, and sometimes even once they were up and running. So it is a bit of it takes a minute to fill out the self-assessment. But don't shy away from it. It's helpful information for your organization. And then it's really helpful for us at organizing the training to make sure that we're covering the areas that are going to be most helpful for the folks who are actually in the room. And then along with that self-assessment, we're going to ask for a couple of your org docs so that we can kind of take a look when questions come up. And as we're designing, where do we need to, again, focus our attention, and what feedback might be helpful to the participants, given what they've submitted. So with that, I think we're ready to jump into the panel discussion. So I want to thank again Michelle, Dawn, and Katie for being our willing and eager panelists. And I have the pleasure of sort of just posing the questions and letting these folks share their experiences with them. So I'm going to work through a series of questions that I pulled after looking at what Rihanna has so adeptly called the roadmap to closings. So we've developed a roadmap of sorts, so kind of a big long laundry list that's in sequential order about all the things you need to think about in different stages of developing permanently affordable homes, leasehold homes. And so we're going to go around the room, and we're going to ask that you, as Rihanna said, jot down your questions or stick them in the chat, and we'll try to circle back to those once we've gone through our questions, rather than popcorning throughout, just in hopes of getting through at least some points across the entire roadmap. So I'm going to start with Dawn. So Dawn is with Banner. She's our lender in the room. And so if we're talking about the earliest stages of development, can you tell us a little bit about like when you like to get introduced to a new project, and what information might need to be on hand before reaching out to potential lending partners?
Yeah, so that's a great question. And it's one that we talk to a lot of our habitats or nonprofits a lot. As early as possible is what I would say. If you know you're going to be working on a project, and that's going to include a land lease or a CLT, start talking to your lender right away. They need to know about it. They need to be part of it. I did put together a checklist, and I'd like to share that if that's okay with you, Julie.
Yes, please.
Okay. Let me get this.
And also, just so folks know, you'll get these materials in a follow-up next week, so you don't have to try to be screenshotting all the slides and that sort of thing.
Yeah. So, there's so much that goes into a land lease, and if you're even going to the CLT, and it does get a bit complicated. So I kind of put this checklist together, and every lender could be just a slightly different. So I tried to be all encompassing, but I could have missed some things here. So again, working with your lender is at the very, very beginning stages, when your board has approved, hey, this subdivision we're going to do this ground lease, then that's when you want to get your lender involved. So starting there, but what do you need for this. Obviously, we're already talking about it. These are the documents you need, the lease agreement, home ownership eligibility, which most of you already have. You want the criteria, which most of you already have for that eligibility. Who's going to be buying these homes in that document. And then ground lease approval. And that it can take on lots of different variety of what that approval is. You want to be approved by the lender if you are doing third-party lending. Some of you I know are not. You're not quite there for that third-party lending yet. You're still potentially doing some in-house lending. But you want to be working with your lender because there are some language that potentially is in that may not make it lendable. So you want to be working with your lender on those items. And I do at the very end, and you'll have it on your checklist that you could potentially submit that into Fannie Mae to get approved by Fannie Mae too. So you don't have to go through the lender approval also. So there's that. And then again, I've already kind of went through this, but lender approvals, you want to, again, you want to be able to finance that lease, and you want it to be agency eligible, to be able to, resell that home, even if they're putting in their portfolio. We're a portfolio lender, but not all lenders, if they're reselling that home later on, you still want it to be eligible for agency based on the grounded solutions model is probably the best there. Appraisal, I know there's the appraisal needs to be completed using the ground lease guidelines, and there is a certain way and certain appraisers to the way they will appraise that property and the way the underwriters will be looking at that property, as well as the language within that ground lease on the permanent affordability. If you are having that permanent affordability, you need to make sure that permanent affordability on foreclosure is relinquished too. So there's some language in there, again, working with your lender on that. And making sure you have that ground lease writer. Freddie Mac or Fannie Mae, they're both interchangeable now. And buyer documents. This is, which you're probably used to now with your income documentation, pay stubs, W-2s, any asset documentation. If they're needing to take a home buyer's education class, and then the proof of down payment, if any. Some don't need to bring in that down payment. And then if there's any resale restrictions for that ground lease or restrictive covenant that needs to be signed at closing. Let's see. Property specific requirements. The title company, the title company also needs to be brought in fairly early in the transaction. They need to confirm ground lease, that it's insurable. The leasehold interest in the property is typically created at closing, and the lender is in first lien position on the leasehold estate. Sometimes it does require the subordination of previously recorded documents. So just a thought behind that. Then you go on to, the ground lease being subordinate, insurance coverage, HOA documentation, and then how will property taxes be handled? It seems always to come up at the very last minute. So make sure you're working on this at least probably 6 months in advance. How are we going to handle the property taxes on the leasehold or CLT? Is there a waiver on taxes on the land? Are the borrowers required to pay the tax on the land? This really needs to be communicated to the lender, so we know how to bill for the taxes and or for the debt to income ratios too, right? So that's always an interesting one. Um, an underwriting review for the lender, they're going to look at ground lease. Is it compliant with the agency rules? There's no first right of refusal violations, which I know Habitats, a lot of them will have that first right of refusal, which we typically don't have any issues with. Meeting appraisal value criteria, and then all the legal docs are in correct order, and there's no issues with uh, any of the covenants. For example, a review of a covenant prior, there was an interesting a tidbit of information that was in the covenant, affordability covenant. This is an example of one that could pose an issue down the line, where they had the affordability grant amount in the covenant that when you record that covenant, it had $100,000 for the grant, which stays with the property. But when you go to resell that house, is the new buyer going to get another 100,000? So you have to really look at your documents and making sure that that affordability covenant is and that rider along with the ground lease is going to work for the long term on that property. And that goes into the affordability piece. And I'm probably talking a little bit ahead of myself here, but and I have an example of that when we get down that line. I was just thinking off the top of my head there. And ground lease approves closing disclosure. And then going on to closing. That's where we want to get, right? It's closing. We're going to close and get the keys to the house. Final ground lease being executed. The previous recorded master lease. In all cases, typically ground lease rider will be executed and recorded. All documents returned to the lender in the funding packages. The ground lease consent to mortgage if it's required. And, the note and mortgage include the ground lease riders. The title insurance will reflect the leasehold interest, and the ground lease included in closing package if required. Post-closing, typically escrow sends the final documents to the ground lease. So, and that's after they close, which is great. And then there's extra links, which you will receive all these extra links to the Fannie Mae checklist for the ground lease writers, FAQs, which has a plethora of information, as well as the portal to, if you're looking to get that ground lease approved up front, which is probably the best case scenario. But there are some really great links out there for you. And that's what I have for all of you today.
Thank you, Dawn. And thanks for highlighting some of the Freddie and Fannie issues. Dawn mentioned that you can get pre-approved by Fannie Mae, so that if you're up and running and you haven't done that, that can help streamline things, because then when you're talking to your lenders, you can let them know I'm already on Fannie's approved list. And if you're not, your lender can help you figure that out. But that's a nice sort of getting ahead of the ball step you can take before you get too far down the road. And then I think we'll talk a little bit more about some of those project structuring things that Dawn brought up also around, your funder covenants and how those can provide unpleasant surprises at the last minute in some cases. So, okay. So Michelle, this next one is for you. I understand you have a lot of experience working with Habitat affiliates throughout Oregon, and you've seen the roadmap. So I'm wondering if you can tell us something about some of the bigger pitfalls you've seen groups run into early on in the pre-development phase.
Pre-development. Okay. Glad to be here. I have a lot to say on this, so I'm going to probably talk pretty fast, but I'll try not to be terribly technical. It's a hazard of being a lawyer, so I am going to try not to do this. Um, the uh, the pitfalls that I see, I'm going to highlight two or three of them. One I see, especially with nonprofit developers who are looking to build affordable housing, is what we call in the industry due diligence. So when you're going to get a piece of property, and you have dreams to build, houses on it for home ownership in the future, it's a really good idea to perform your due diligence before you acquire it. Even if someone's giving it to you, you could get a lemon. So, what I mean by due diligence is that you should uh, know about its zoning. You should know if it's a legal lot of record, if it's a legal unit of land. You should do a phase 1 environmental examination, and you should do a survey to find out if there's stuff that is belongs to the neighbors that is encroaching on your land, for instance, or if there's stuff on your land that's encroaching on theirs, which always has to be resolved before you can pull permits, generally speaking. And maybe a sneaker or a sleeper in due diligence is the title report, which is, not, everybody gets it and nobody reads it. But in the title report, there's these exception documents, and you should really open those up and read them. I recently had a developer, he bought 3 or 4 lots in the same neighborhood, and buried in the title was a restrictive covenant that said you can't build more than one house on this property. And it was like almost 70 years old. But those don't go away, and they are mostly enforceable, and they're often just kind of stuck into a document. They'll be highlighted by the title company, and if they're not, you'll have it insured, and you can bark about that later. But this meant that my client who wanted to build, a home and 2 ADUs, a home and 2 ADUs, a home and 2 ADUs, like that, couldn't do that without violating these covenants. It's a legal snarl you don't want to get into. I've seen height restrictions, setback restrictions, and of course race covenants too. We can get rid of those, and they're not enforceable. So as offensive as they are, they're not the ones to be most worried about. And we do see them a lot in Oregon, unfortunately. But those height restrictions, setback restrictions, maybe it doesn't allow for a garage. Maybe a lot of them say you can't like raise pigs on the property or something like that. But I had one that said you had to be a member of a certain church to own property there, and that you couldn't have wine. You could have no alcohol on the property. So there's some weird stuff out there. You should read your title report. So that's one. The second is your board. If you're going in for an affordable housing, a sustainable, permanent affordable housing conversion, like you're really moving into that right now, and you have a project that you're dreaming up while you're doing that, your board needs buy-in. And I've seen instances in which I'm like, so what is your preference for resale formulas, right? And we'll talk more about those later. And I'll say, so what does your board say? What have they decided they want to do? And I often get the answer, oh, well, the board hasn't really thought about that yet, and we haven't talked about it. That's a good thing to take care of, as a threshold matter. Um, and well, there's so much. As a lawyer, I see the pitfalls. People fall in the pit and they call their lawyer, right? But one thing might be to get land use and good legal advice early on. So if they can see those pits coming and keep you from diving in. And if you've already gotten there, reach out.
I love the image of the bat line from the bottom of the pit to you, Michelle. I think that's a good one. And then I also love that you kind of highlighted sometimes free is too expensive, because I think that's something also that, and there's also another one in there along those same lines that I see sometimes, which is just that people somehow think that they have to get land for free if they're doing a leasehold or permanently affordable housing. And that's most of us buy it. Most of us pay market rate for it. Because
Very
that's what we
true.
have to do. If you can get it for free, that's great, but be careful. Okay, so Katie, this next one is for you. Now we're moving into project structuring. So now that we have our parcel that is appropriately zoned and, and has some clear title, and pre-development's underway. What are some of the priorities as you move forward into actually structuring the deal? So how does that look, the deal structuring side
Yeah.
of things, once you have a lot to, or a project identified?
Yeah, I think I mean, it's been interesting hearing Don and Michelle talk through because a lot of how we're structuring this roadmap, things seem to creep into different parts of the process. One of the things I was going to bring up in this stage is really looking at the funding sources you have already layered into the project, what those sources are, what additional restrictions or rules or guidelines come with each of those sources and how those actually play into the property itself. So, does the city require that you have a covenant, recorded on the land as well as what your land lease? And do they have terminology in there that is supporting both of those documents? Or are there, back to Don's point, it's not just about the ground lease. If there's other covenants and documents that your funders are going to require stay on the property, those also need to be mortgageable or go through the lending side to make sure your buyers can get mortgage financing. So I know we've come talk about pitfalls. I think I was just thinking, gosh, Michelle, I think I've reached out to you this week on a couple challenges. So even as experienced, I would say practitioners, these things do pop up, and so that's why we're trying to set you all up for greatness here. At the same time that you're looking at your funding stack, a lot of those funding sources also will kind of dictate your eligibility requirements potentially for the buyers that you're going to be working with. So making sure you understand what those requirements are and that is a part of how you're structuring things into moving into one of the next phases, which is more recruiting of home buyers. And then, yeah, the ground lease and the long-term affordability documents that Michelle talked about, I really do think that should be finalized in the before you're out there buying the
Pre-development.
land. Yeah, pre-development. But if you get to the project structuring stage without that being finalized, now is the time to fast forward that because those documents do impact the mortgage financing and how they, like I just said, how they play together with the other funding documents that might need to be recorded on the property. When you are a lot of times in the kind of pre-development stage, you're more focused on working with lender partners that are providing construction lending potentially or acquisition lending. At the phase when you get to project structuring and you've got all that in place, now's the point to start pivoting towards how your buyers are getting the mortgages and making sure those relationships are there too. Oftentimes, specifically with Proud Ground, our construction lenders are not our mortgage lenders typically. So it's definitely working through and making sure your buyers can get those mortgages, like just the roadmap in those slides that Don had, all of that needs to be happening with your lenders so that you're getting that all ironed out before you even have a buyer in the door. Um, Proud Ground, we do have a list of the terminology is always changing. It could be preferred. I'm looking around the room to see. I can't remember what I'm supposed to say. A preferred list of lenders. We have a list of lenders that are trained. That's what it is to be able to provide these type of mortgages. We know that those lenders have reviewed our documents and have sent those all through underwriting and understand that they're approvable and based off the national model. That is needed in order to get those financing. And in addition to that, we proactively are doing quarterly check-ins and trainings with those lenders to keep them up to speed, not just for Proud Ground to share what's going on with us and how that works, but also for Proud Ground to get updated on changes in lending and guidelines and things and how those can affect our buyers or our project that is coming online 6 months from now. So it isn't just a get them checked as a lender that can do loans on these type of properties and put them on a shelf. There is back and forth engagement that continues throughout. So I see this phase really as, again, before you're getting your buyer in front of you is making sure you're understanding all the funding sources that are coming into play, what those requirements are, and how your ground lease will work with those requirements as well as with the buyer's financing.
Great. Thank you, Katie. I love the two-way street of the lending relationship highlight too, because it's true. It is an ever-evolving industry, and the rules. I mean, when the mortgage crash happened, it was like they were changing those underwriting guidelines every 2 weeks, and just when you thought you got someone sort of mortgage ready, then the bar would be raised. So it's important to stay on top of that, so there's no unpleasant surprises as you're recruiting buyers. Um, and then the other thing that I appreciate that you commented on is that the funder relationship, and also it's important to recognize in Washington, the Washington State Housing Trust Fund has been partnering with community land trusts. I think our oldest project is 31 years old. And so it's been decades, successful partnerships. But they have new staff now with different interpretation of the same rules. And so they came up with a whole new set of legal documents, which don't work for community land trusts. So just because they've been a funding partner in the past, just because it's worked for your organization in the past, doesn't mean you get to skip that part of the pre-development due diligence, because the things are constantly changing. And until you get those covenants in your hand from your latest funding partner, you don't know what they are going to say in terms that might cause problem for the lenders down the road. So that's a big one, I think, to keep an eye on. Okay, so now we're gonna. Okay, I think my next question is for Michelle. Um, so once an organization has done their work in terms of the resale formula, how do you work with new groups to get their documents all polished up and ready to go? And by documents, I mean their lease documents and any other legal things that the organization is going to need to have signed at closing.
Well, I often meet with them 2 or 3 times, especially if this is like their first permanently affordable project. That's a big lift in that first transition from whatever they've been doing before to using a land trust model. And a lot of times, what I do, first of all, is I try to establish some vocabulary so we know what we're talking about. Imagine that. And one of the things that is a common misnomer or misunderstanding is just that, you have to be a community land trust. And a community land trust, like Katie knows, she works for one. It's a term of art. It's a very particular kind of organization with a particular mission and approach to affordable housing. Um, and what the reason in the reason behind all of the CLT um, model projects or project structuring, deal structuring, is it's based on a CLT approach, which is basically to have a nonprofit organization hold title to the land long term and to sell homes one way or the other. And we're not talking about condos today, but we'll need to soon because it's a pretty different picture in terms of this timing of your leases and such. So that really you don't have to become a community land trust. We're using a community land trust model, and you can kind of treat the homes, the sale of the homes, and the lease of the land according to that model, and you don't have to become a CLT and organize a whole new entity to do that. The other thing that's really confusing is we use these terms land lease and ground lease, and there's really no difference. They're interchangeable terms. The land lease is really like the way community land trusts over a long, long time have referred to this lease between the nonprofit and their homeowner. That lease is usually called a land lease, but it's a ground lease. And they might call a service fee, but it's really rent. So there's CLT kind of specific language that is in use amongst us even here today, but ground leases and land leases are the same thing. Um, And then long-term affordability, one of the first things I try to do again is like check in. Has your board got education about this? Do they know what you're doing? Executive director, project manager, and have they bought in? Do they know what they're getting into? Um, and I think that that's a really important part of getting ready to get their documents polished up. I have to know what they want to do. Like I'm going to draft those documents for them, but I need to know what that organization wants to do. And there's variations on the theme. There's different kinds of resale formulas. It could be appraisal based. It could be a straight 2% appreciation sharing over time. It could be, there's like three different basic formulas that are allowed under the grounded solutions land leases. And we keep saying that Grounded Solutions used to be known as the CLTA. And they have a 2011 version of their land lease that we still use because it's been pre-approved or blessed by Fannie Mae, i.e. Freddie Mac, and also therefore FHA and VA. If you use that, your underwriting gets to be limited on the backside. So that I need to know what they want to do. And sometimes that's driven by how much staff they think they're going to have because these arrangements require, ask Katie, after closing, a fair amount of administration. And if you have, for instance, you're going to need to handle resale requests and resales of those homes that are permanently affordable. You got to ask yourself, how are you going to do that? How are you going to staff that up? And how do you want that formula to work? I can't draft those documents until I know these things. And sometimes that's straight interest escalation for how much equity sharing there is for a homeowner when they sell their home. It's because that's a lot easier than going out and getting appraisals. So if sometimes those kinds of decisions have to be made up front. And then what you need is a good solid master form land lease. This is what we get from Grounded Solutions. And they give us this, sort of multi-state form, and then we have to make it conform to Oregon law and practices, and also whatever has happened in the last since 2011 changes to Fannie Mae. So Fannie Mae comes up with, new things that these leases are supposed to say or cannot say or should say all the time. And I have to stay on top of that. The seller's guide for Fannie Mae is 1,700 pages long. It's lovely. I keep a copy of it on my desktop all the time. And it's not my favorite, but you have to refer to it if you work in this space and it changes. So get on, if you're interested in this, get on the list with Fannie and they'll tell you, send you their letters when they change things. That's kind of cool. Um, this has to be done preferably early. I have clients who have come to me, their houses are built. We want to close next month. Can you do our land leases for us? Can you get that ready for us, our affordability stuff? Like, okay, well, what have you told your buyers already? Like, what did you tell them? Because they're coming to me to draft those documents for them, but I know that they've already made some representations to these folks, and sometimes don't do this. Sometimes they've already had those folks sign and notarize. Yes, I've seen that. A document that says, this is the kind of profit sharing or equity sharing that I'm going to get. And guess what? At least in this one case, it didn't fit a permanent affordability. So they had folks signing their partnership, like when they come into the Habitat program, they had them signing and notarizing a document that read like a contract that promised them they would get equity sharing that was not compatible with a permanent affordability model. So it's a chicken and egg thing. We're going to keep talking about these loops, right? Looping and looping and looping. You got to think about the end. You always have to have the end in mind when you do anything, including educating your homeowners as they come into your program, including the disclosures that you give about how their homes are going to be affected by these kinds of documents, how their wealth building is going to be affected. But don't get too specific. Don't make it a contract. Disclose, but don't promise. This is really
That's like a
important.
bumper sticker we should all have, right? Disclose but don't promise.
Disclose, but don't promise. We make promises at closing when we sign those closing documents, but it's really problematic when I have, like a client come to me and say, we want to close next month. And I say, what have you told people? And what
Mm,
they've told people is not what they really intended to do. And so a verbal promise is enforceable. So you have to start even talking with your homeowners as they come into your program to prepare for homeownership. You have to talk to them with the end in mind. And I have to know everything. If you have an attorney, you have to tell us everything you've done. Or I can't fix it.
Thank you, Michelle. And as somebody who teaches whole classes on resale formulas, I appreciate your nod to you remember you have to staff and implement whatever you come up with, so don't make it too complicated. That's my like
Yes,
overriding advice is simpler is better. Um,
agreed.
okay, so now we're going to shift gears to the buyer pipeline. Katie, back to you again. So um, when do you at Proud Ground start recruiting buyers for a new project? And we're going to go a little faster now.
Yeah. Yeah, I mean, really, when you are confident, so this comes back to I have a hard time with starting too early because I don't want to promise anything we can't deliver. But I think once you have, clear um, pricing, clear information about the actual houses, expected completion dates, all of that, as well as criteria and guidelines to qualify, I think you can start getting that information out into the community because it can take time working with the populations we work with in order to ensure that they're ready to buy. So I think early is really important. Obviously, Proud Ground's been around for a long time, so our recruitment looks a little different since we're constantly recruiting for things that are active now, and those buyers might buy now or they might buy a year from now. But when you're working in a new community where this is a new thing, the kind of outreach and groundwork looks a little bit different. It involves explaining what this type, I don't want to say community land trust, but what this type of long lasting affordability in housing looks like, how the resale formula works, and why it is important in the community. So that outreach that you're doing and education is not just to get your potential home buyers in the door, but it's really to make this a bigger conversation within the community. We have had challenges at Proud Ground over the years with, a home buyer walks in, they hear about it, they're like, this is awesome, this is great. And then they go to family dinner and they talk to their cousin who's a real estate agent. And their cousin is like, why would you do that? You have to own the land. You have to own the land. That's not real home ownership if you don't own the land. And the buyer is suddenly not interested anymore. So I know we can't reach every person in the community, but I always put importance on doing, even for Habitat affiliates, doing education within the real estate community about how the shift to long-lasting affordability is working with Habitat homes could be really, really beneficial because you want to make sure to have the support at all levels and understanding moving forward. Um, and during this timeline, of course, if you get buyers in the door early, you have much more time to ensure that they are ready to buy when the properties are actually completed, that they have their homebuyer education and counseling completed, and they fully are understanding the resale restrictions and the lease documents going into that closing. As well as any like homeowners association obligations that might happen in your developments. Another great partner in new communities that you're working with, as you probably all know, is housing counseling agencies. So the housing counseling agencies that service your area, those counselors should be very aware of the opportunity, and they don't need to know all the ins and outs, but they can definitely be a great referral partner.
Great. Thank you, Katie. And Dawn, a similar question for you. When do you like to hear from potential buyers for the first time? And is there such thing as too early, or conversely too late?
I don't know. I don't know if there's too early. We always like to be early on in the process. I think after you have selected your buyer or pool of buyers, I think the lender likes to be involved, and if you have a selection criteria for those people, you always want to talk to your lender about that. Does it also fit in their guideline box too, right? And especially if you have a certain guidelines that you're working with in your selection process, and maybe you went outside of that guideline, you definitely want to maybe work with your lender as early as possible, because it may not fit in their box. And so how do we fit that person in that box, and make it work on the third party lending side for the lender, and make that happen, in building the home, or if it's 6 months from now, or if it's a resale home, how can we make that work? So I don't know if there's a too early. I haven't seen that happen, but I mean, somebody might have a different opinion than me on that one, but it's really working with them up front. And also, there has been, sometimes I know working with homeowners, there's been situations where selecting them too early on, and the building process gets delayed, and now they're over the income limits, right, for the certain county or for that program, right? So, and working with your lender on that as soon as because some programs only allow up to certain income limits. So I've seen that happen, if you're working with clients really early on in the process. So that can be a pitfall potentially,
Yes,
right? I've seen that. And
for
I think
sure,
we
yeah.
probably all have, unfortunately. But if you have a creative lender, you could probably figure out a way to still make that work, and have different programs that allow for it. So you just, as a nonprofit, have to allow for it, I guess, right? And have it as an exception. So I would say that I don't believe there's anything as too early. It's good to keep working with the client, make sure they understand the whole lending process, walk them through it, understand the mortgage process, walk them all the way through it. I know they're going to go through their home buying classes and education classes. And it's really great to work with, a loan officer, especially. You don't want them to go out and purchase a brand new car, or, and just really change their financial situation, and now they don't qualify, right? So really making sure that we keep them in that qualified space. Or if they really do have to go buy a car because theirs broke down, then hey, you can afford a car up to a payment of $150, and we could still qualify you, right? It's really having that communication with the loan officer. So, we've seen those circumstances, and that happens in mortgage in general too, right? I mean,
our buyers aren't special in that category.
No. So it's really, working through that process, and not, 60 days beforehand, working with the mortgage loan officer, and going, oh wait, you have 2 new cars? Wait, what happened? You don't qualify now. What happened? So I don't think there's anything that's too early. Once you have your buyers selected, having that warm introduction over to your lending partners, and, starting to work on that pre-qualification process, and gathering all the documentation, seeing what they have, getting them education, understanding that mortgage process. What does that look like? Giving them all the pitfalls of through that mortgage process, I think, is really important, so they understand what can, the do's and don'ts, right? The mortgage do's and don'ts that, many of us have been through, some of us haven't, but understanding that piece of it, And it's probably the too late in the process. I think there could be a too late. If you're under 30 days, you're probably too late. It does happen. As a lender, you could probably make it happen, but it's going to be a fire drill, right? And especially if it's a leasehold situation and you haven't had a leasehold approved by that lender, you're not closing in 30 days. You're just not.
Or even 60, I would
You're
say.
not,
You
yeah.
haven't been approved if you
No,
haven't.
no, not at all. You're not even close to closing. So,
All right, thank you.
mhm.
Okay, so that now we're going to switch over to pre-closing. Katie, I'm going to go to you. Can you speak to your role kind of juggling buyers, lenders, escrow, any other partners, kind of circling back to some of those early pitfalls of making sure that the assessor has done their thing and the lenders get their info and kind of how you conduct at the end there?
Yeah, it's a lot. There's a lot of moving pieces, and I do see the organization's role as being that connector, to really ensure that the buyers have the information they need, the title company, the lenders, if there needs to be appraisal communication or appraiser communication, that is all the work of the organization. So the for the buyers, we're working closely to make sure that we have updated documents. We've done Don's approving them on the mortgage side, but we're also doing a final approval for all of our grant funders, to make sure that they are qualified. So we might need updated documents. Um, we best practice is that buyers do review these lease documents with an attorney prior to closing. So we've been able to do that with pro bono attorneys, thankfully, but I do think that is super important for buyers to get independent legal review. So we're confirming that that has happened well enough before closing. And with, communication with the lender, making sure there's the lending pieces, there's usually a lot of like I said, again, appraiser conversations, because appraisers, if it doesn't get to an appraiser that understands these type of properties, there is usually some support needed from the organization to refer them to Fannie Mae guidelines on how to do the appraisals on these type of properties. And then as you're moving towards closing, really on the escrow side and the title company side, like Michelle said, making sure those preliminary title reports have proper legal descriptions in place, because that is something the lender is getting as well. I typically still, even with an experienced title company, review warranty deeds that are actually legally transferring ownership of the property to ensure that we're not selling the land with the house. Um, and also reviewing settlement statements to make sure that as many of you know, if any grant funding is coming in at closing, those funders typically need to see the grant funding listed in a specific way. So I am 2 weeks before closing asking for drafts of these documents from the title company, to get ahead of any of those issues. And then your escrow instructions to the title company also have to have very specific language about how your ground lease documents are recorded and the order of those recordings to ensure that they're, the best way I can describe it is they're lending basically on a leasehold, right? Improvements and a leasehold interest in that land. And you have to create that leasehold first, right? In order to do that. So, you have to make sure it's all structured in that way. And then yeah, it's really just about proactive communication and troubleshooting, trying to foresee and plan ahead for those, but also not keeping your buyer out of the loop on what's happening. So making sure they're a very active and engaged part of the process.
Great, thank you. I think that one of the things that I always tell new groups is you can't rely, especially if it's a first transaction in your community, your title company isn't going to know how to do it either. And so you will be the one person in the room who kind of knows what's going on, even if you don't really know what's going on. So, don't rely on these other kind of experts because it may be completely unfamiliar and new to them. And so, if you're working with a First American title branch and you know that some other community has a First American title branch who's done these closings, then you can try to connect the people in your community with the people in Portland who have done this 100 times over. That kind of thing can go a long way in ensuring. And then, like Katie mentioned, actually reviewing the documents. I go through every legal description on a lender's deed of trust to make sure it doesn't say they're putting a lien on the land. Like I just have to read them all because, and every once in a while there'll be a new person at the title company who likes to change the way it's written. And we have some back and forth. But those are the kinds of things that, I mentioned in a planning meeting. I worked with a group who, after closing, was trying to send their documents to this funder to get their draw. And they said, well, send us a copy of the deed. And they called the title company, and the title company's like, well, you don't have the deed. We gave it to your buyer. And we were like, well, our buyer didn't buy the land, so maybe you shouldn't have given the deed to the land to them. So, there was a lot of untangling, but those mistakes happen, and you got to do your due diligence to make sure that they don't happen to you. Okay, great. Well, I want to thank everybody. We did have some more questions, but I want to make sure that we have a chance for all of the folks who joined us today to ask some questions. So with that, we can open up. You can either raise your hand and we can call on you to unmute, or you can stick your questions in the chat. Let us know who you'd like to answer your question, and we're happy to kind of popcorn around across the topics, anywhere from pre-development to closing. I wrote down like 10 questions while
I
people
think
were
they're
talking.
all
Okay,
in right
great.
now.
I see Kim. Kim, you can unmute.
Yeah. So I was just going to ask on getting the land lease approved through Fannie Freddie, is that the master ground lease or the short form or both?
Michelle, you want to answer that? Or actually, Dawn, do you want to
I
answer
can,
that since it's
or
okay? Katie, go.
well, I don't, I mean, honestly, Kim, that is interesting that you asked that question because just this week I was like, I should probably upload our short form to that system. So for us, we have just provided our master form ground lease and gotten Fannie approval and we're approved. I do think it's probably important. I think there's something that says like, are there any other documents
Yeah.
recorded? And I just left it because essentially the short form is really just inputting the information in the master form. But my thought process this week was like, well, you could actually do a lot of amending in a short
That
form.
short form. Yeah.
So I do think it's probably important to upload both to the Fannie Mae portal.
And then short follow-up. So like we're just getting to where we're going to record our master. Could you go get that approved before you recorded it?
I did
Yeah, I
when
think
we
so.
updated ours because I didn't want to pay for the
Yeah.
recording and then have to change it.
Yeah. Thank you.
And also just, I mean, I think this has been said several times, but if you're starting from the Grounded Solutions model lease, it is mostly fine already, but there are blanks and decisions you have to make throughout that document to make it your own. And then they want to make sure that there's no significant variances. And then they do require the recording of the rider, which kind of repeats a bunch of stuff that's in the lease, but makes the Freddie and Fannie feel a little bit better. Okay, Sarah.
Thanks. I'm Sarah Radcliffe. I'm with Habitat for Humanity, Portland region. I just have I guess just a suggestion for format going forward. I feel like I'm frantically taking notes check legal description and deed of trust, make sure not actually conveying land. But it's really hard to just to be able to look at some examples of maybe an interactive, you show us an example of language that does something we don't want to see happen, and then we try to figure out what's problematic or what might be missed, because it just feels like thankfully we have Michelle DeRosa who guides us through this process, but I feel like for my brain to really latch onto these ideas, I need to see some actual language. So just a
Well,
thought.
and this is the teaser, so thank you for that, because there'll be this is the teaser for the upcoming
Right then. Okay, awesome. Thank you.
much deeper and hopefully more thorough training in April.
Thanks.
Shannon.
My question was, I've been struggling trying to find a Spanish-speaking attorney who can go through this master form land lease. And in the end, we're having to go with an English attorney with an interpreter. But are there Spanish-speaking attorneys in the state of Oregon that do this? I can't find them.
Mhm.
I
Fine.
I haven't found him yet either, Shannon, and we have just paid for translation during those appointments, but
Okay.
yeah.
We did actually translate our document into Spanish as an example, so that if
We
your
did
buyers
that
are
too. Yeah.
literate Spanish speakers, they at least have the document in their native language.
So that came up too, but there was a question about concern about translation if terms weren't translated, ultimately correctly by the translator. Isn't there some sort of like legal
Well, they're
issue?
not signing that document, right? I mean,
Okay,
Michelle
okay.
can pipe in. They're not signing that document, but it's to give them something that they can read in their own tongue. And then also, um, the translator could make the same mistakes. I don't know how you get around that.
Yeah.
And in the end, they're signing an English document that they can't read themselves. So we have to rely on their, either the translator or there's a lot on that person's shoulders. I don't know how to get around it.
Yeah, I would suggest getting somebody who's at least kind of a paralegal or does legal translations. A friend of mine has done, arbitration court translations or, and she does that as part of her, it's just what she does. But you don't want somebody who's never translated a legal document trying to translate that one. It's a complicated piece of work.
And also I mean, we've had like before we actually paid a translator to translate it, we had translated it, but each time we gave it to a different person to translate it, they had different opinions about how it should be translated. So clearly there's not like, there's not one Spanish, right? There's a lot of different versions out there. Okay, another Shannon.
Great. Thank you so much for all of this information. So I'm just thinking about like, what if I'm a new organization to permanently affordable home ownership, and I hear that there's this great training, and I hear that there are these templates that you can customize. Does this mean we can just like do it on our own, or is it still important to contemplate working with an attorney?
You want me to take that one, Shannon?
Sure.
I can take it too.
Yeah, I'd love to hear a couple.
Yeah. Well, yeah. Yes, the answer is yes.
Yes.
A lot of these deals are getting really complicated, right? It's not just about that one document and having them looked over. Don's slideshow sort of gave you an idea. That was awesome, by the way, Don, because it was sort of like an overview from a certain perspective of all of this. But you should not do these deals without an attorney, in my opinion. And there's not a lot of attorneys who are well versed in this right now. I'm just going to say that too. Like the title companies, it's okay for you to say, "Could you call Michelle?" And I will talk to another attorney and try to help them if they'll call me. I've seen some mess ups even at that level. So, nonetheless, customizing those. Forms, but even at the very beginning, back when you're uh, putting together your deal and the structure of of your transaction to buy the property, develop the property, and then to sell it. Those are each three different stages, and you need legal counsel at every single one of those stages. This is not Kansas, anymore.
And Michelle, does that mean you need three different kinds of attorneys throughout your process?
Not typically. I mean, a real estate attorney should be able to do most of that. And if you couple that with a land use consultant, if you're really like needing to do a subdivision, for instance, or a partition, or even a property line adjustment, you need a land use consultant, and they're worth their weight in gold, good ones. And they're a lot less expensive than an attorney. And so some of the work about development, at least, is better done there, in my opinion, than with a real estate attorney or a land use attorney. Not least of all because they're more affordable, but because they're good at it and they know the people down at your county or at your city and know how to talk to them. They do it every day. That relationship matters. But with these documents, And if you're partnering with anyone, if you're partnering with anyone, and partnering, I'm gonna like, um, uh, if you've got a project manager, if you have a general contractor, if you have if you have subcontractors, if you are using anyone, those are contracts that should be reviewed by an attorney, honestly. And development agreements, disposition and development agreements, like if you're doing a private partnership, those are complicated. By the time I get, like three different nonprofits working together, four different funding sources, and here's like a reality check. I'm just about to close something like that. We're talking about, anywhere between 20 and $40,000 in legal fees. And that's at discount. So it's not as complicated as a low income housing tax credit deal. So we're not the pay to play is not as high. But this isn't building a house on a lot and selling it anymore.
And then one other comment just to, once you have your documents, so development aside,
Yeah,
if you have your documents drafted, then you can set up automated systems to fill them out for
you can.
transaction.
Yeah. I
You don't have
mean,
to
I
necessarily have an
still
attorney.
often will generate a short form for each of my different projects because we might have different funding sources that have different requirements. Maybe they need like special anti-discrimination language in there. Maybe they need, if you have PHB money and money from the city and PSEF money and LIFT money, they all might tell you that your homeowners need to be making promises to keep you out of trouble. So the short form often, I try to do those for my clients because I need to make sure that we're considering all of those promises that the organization has made to their funders, their grantors, and then we have to push that down to make sure our homeowners are promising us they'll do those things that we're bound to make happen, right? So they do vary a little bit with the landscape that I see right now. There's quite a bit of different sources for different kinds of grants, different sizes of grants, SDC grants, SDCs, like you can't rent it, blah, blah, blah. They vary. So each of those operating agreements, restrictive covenants, SDC waiver agreements, whatever it is, they might have a hook that could get you in trouble if you don't make your homeowners promise to do or not do something that that you've promised will happen to your grantor or your lender.
And one other follow-up on that is just that it's okay to push back on your funders also. If they are asking something or demanding something that isn't going to work, then
Oh,
you should
totally.
tell them because just because they have the money doesn't mean they're right. And I
No, that's a really good point, Julie. I mean, part of what is making this landscape really fun and interesting is we have different sources of money, but not even those folks who are making that money available to us know what they're doing. And so, there was some money, my clients on the call will know about this, but like there was some Metro bond money, for instance, and each jurisdiction had to come up with their own agreement for that because Metro didn't want to do it. And so each one was like, okay, let's do this. And they came up with this thing that literally would have meant we could never have sold the houses.
Mhm.
And ensued, 14 months of going through a hullabaloo with four different jurisdictions about this and ending up with three or four different documents. Those are always evolving. Julie's right. Sometimes they tell you it's the same program, it's the same deal, and the documents are changed, and they don't necessarily tell you.
Mhm.
So, if I may, and I think I saw a question in chat as well, I just wanted to maybe emphasize this point that it seems like as we're getting ready to take this road to home closings with permanent affordability, like maybe step one is think about who all needs to be on your team.
Yeah.
That it's probably going to go beyond your own organization's staff and board to your mortgage lender, your construction lender, an attorney, folks at the title company and finding someone at the title company who knows about, this work. So like getting the team together, that needs to be one of these, I think, early steps. Thanks.
And
Thank you.
I'm going to add in there, not just an attorney, it has to be a real estate attorney, because I have seen where boards have had attorneys, and they're the ones trying to do all this work and it doesn't go well.
In Washington, the Attorney General's office doesn't even know what they're doing. It's making
Right.
They use words like deed restriction, and covenant interchangeably. And
Yeah.
Anyway, yes, they don't always know what they're talking about.
Yeah.
Okay, I think we are about at the point where we need, it looks like maybe there was one more question in the chat about using real estate agents. Katie, do you want to respond to that one, being a licensed real estate agent?
Yeah. I mean, Proud Ground, we got licensed about 15 years ago as a real estate brokerage after working for years in partnership with licensed realtors. We found it very helpful because we can facilitate then a sale of a Proud Ground home, already an existing Proud Ground home, to another income qualified home buyer. So I think it becomes very important in the resale process. I know a lot of Habitat affiliates buy homes back, fix them up. You could resell them. You could certainly do that, but it gets to be a lot. And as you're growing your portfolio, you have this obligation to be available to do that, both financially and just, logistically. So I do think it's important to be open to working with real estate brokers. And for our team, what that means is we now have to make sure that a buyer's agent, all of our buyers are represented, and that buyer's agent gets paid for the work that they do. So we found it to be valuable to the clients. I think they feel like they get, it's more standard to the standard home buying process, and they do get someone that's looking out for them through the process. It also comes with challenges, but we do work with them, and we are one ourselves.
And I think to the same point about all of the partners, if you are working with real estate agents in your community, make sure that they understand your product and what you're selling, because there are those unfortunate moments in communities where they're not selling your product, they're discouraging people from buying your product. So making sure that you've done your job of community education. I think in Washington anyway, most real estate agents in the communities in which there's community land trusts really value having some place to send the folks that they can't find a home for in the conventional market. So, there's not by any means always an adversarial relationship. You just want to make sure people understand what you're offering and how it's different. Okay, is Rihanna still with us?
I made it back. Thank you.
Okay, good.
Still
Yeah, I'm
having
going to
some
turn it back over
technical.
to you.
I know. First of all, let me can we give our panelists a round of applause? I think that was a lot of information. Sarah Radcliffe, I'm glad you were taking notes as fast as possible, right? As we mentioned, this is kind of just a sneak peek, right? The idea is this is your sneak peek. We are going to go much, much deeper into a lot of these topics, frankly, that we've touched on today. We're hoping to go a lot deeper in our Land Trust Practicum, which is coming up. What I want to say as a couple of next steps, right? Please fill out this webinar evaluation form I just dropped into the chat. That will take you about 3 seconds. It's going to be really, really short and fast. We do want your feedback, and that will help us inform, right, future webinars as we go forward. So that's really important. Also, very important, do visit our Land Trust Practicum webpage. This is really important because this is going to give you kind of all the links to all of the pieces that we have been touching on today, including the registration link for our January 22nd webinar. We want you to attend that webinar if you can. That is going to be Permanent Affordability 101. We're going to go over vocabulary, legal terms, make sure we're all set to kind of together go into our in-person event in Sisters at the end of April. That is going to be right around the same time that we open registration for our Land Trust Practicum in-person event as well. So that is coming. If you are not getting direct communications from us right at this time, it is really important that you fill out our interest form, which I've also dropped the link to in the chat. So that we can let you know when registration opens and drops, right? If you want to register, we're going to have limited space. And I'm going to repeat that again. We are anticipating hitting capacity. We will have early bird pricing for a couple weeks only. It is going to be a super reasonably priced practicum, probably a little too cheap for y'all. But I do want to say, not only that, you have scholarships. So we really, Oregon Housing and Community Services is really helping us make sure that there are low barriers, right? We want you all to come and learn and be there, and we're going to help support that through the scholarships and through reasonable pricing, hopefully, as we go. So fill out that webinar evaluation, visit our Land Trust Practicum page. If you haven't been getting our direct communications, do that interest form. One more round of applause for our speakers. I don't think I'm missing anything. So thank you all for being here today. It was a huge, hopefully it has given you a little bit of incentive to move forward with us here and join us again.
Thank you, Rihanna.
Thank you.
Thanks, everybody.